Hello, everybody. Today we're having a conversation with Aret Kalayjian. And Aret is a home consultant with Univest Mortgage Banking Insurance Company. I'm going to say a little bit about you, Aret. During the past 15 years, Aret has helped thousands of individuals and families become successful homeowners. He realizes that buying or refinancing a home is one of the largest financial decisions an individual or family can make in their lifetime. While this process can be challenging at times, Aret is committed to providing borrowers with the knowledge and resources they need to make informed decisions with confidence. So welcome, Aret. You have been such a valuable resource to our clients almost on a daily, weekly basis.
Sometimes even spot on. I mean, I've called Aret like in the middle of a consult, not consult, but in the middle of an appointment. And I say, I don't know if he's going to answer because he's really busy. And there have been times that he's actually picked up and has answered questions, really informative questions. And he's just such a delight, not only professional and knowledgeable, but just down to earth, nice man.
Thank you.
Appreciative.
Yeah, your expertise and support in the divorce world has been really wonderful. So thank you for that.
My pleasure.
Yeah. Today we're going to talk about protecting credit during divorce. And there's a lot of questions. We're going to try to get through as much as we can in the next 15 or 20 minutes. But if you want to kind of give a little overview about protecting your credit during divorce, and then I'm just going to pummel you with questions.
Absolutely. One of the most important things is to make sure that you don't make any major changes to your credit pre-divorce or post-divorce. One of the important things is hold on to the established credit lines, and otherwise, when you open up new credit or if you close older credit, that's going to have a major impact on your credit score, which will impact the type of interest rate you will receive, type of down payment you're going to have in order to be able to qualify to obtain a mortgage.
What about removing yourself as an authorized user? Is that an impact on credit if you leave it open, but you just remove yourself?
If it's not a card that you use, and it's going to have an impact as far as during the divorce matter, that you don't want to have that obligation on your credit, mm-hmm. I recommend removing yourself as an authorized credit holder. It doesn't impact your scores as much as if you were to close out an account.
Well, I have a question about that because it kind of backfires when you don't have established credit, and a lot of times somebody needs a credit card in their own name because they don't have money to pay for attorneys or to come get their financial portrait or just to go get a place on their own. So they have to open up a credit card to just escape from their marriage. So how does that impact them then? So you're saying that if they go do that, or they're advised to go do that, it might negatively impact them later to purchase a home? Is that what it is?
It is. One of the things when you open up a new credit card, doesn't have enough history to be able to determine what your repayment habits are going to be. So because of that, immediately they reduce your credit scores until you can show a pattern of history, how well you use it, and how well you pay it back. So if nobody's accessing their credit for mortgage purposes, let's say in the next 4 to 6 months, it's okay to open up the credit card, because then by the time somebody's going to look at it, they would have established the amount of credit length of period of time to be able to increase their scores. But if
go ahead, I'm sorry.
No, finish.
Could they get it if they had a joint account with their spouse? Could they ask for one in their own name?
Yes.
Would that be a better route to go than to go to a different bank and get a new one, or does it not matter?
It doesn't make a difference. It's going to be a new credit trade line on their credit report, regardless of whether they get it from a different institution or they get it from the same institution.
Okay.
But if it's a necessity, it needs to be done. We'll just work with the whatever scores are available, and then determine what kind of product that we'll be able to offer them.
Okay. So if you have a high balance credit card and you've got to pay it off because now you're doing your budget and you got to figure, you know, everyone's getting their finances in order. Is it a ding, as we say, on a credit report if you transfer all of that debt to a new credit card with 0% interest with the intent of paying it off in, let's just say, 12 months?
No, it wouldn't impact your scores long as you retain the other credit card. If you have to close it because of the transfer requirement, then that's going to impact your score. A, you're opening up a new credit card. B, you're getting rid of a credit card that you've had for a number of years that has been helping you improve your scores. So I would definitely tread carefully with that to make sure that it's not a requirement to close the other account out. If it isn't, then it's a smart idea because you can remove that. One of the other things is possibly not transfer all of the money over there, only transfer up to 30% of the available limit. If you're able to do that, that's going to impact your scores because the magic number that's out there is not to utilize more than 30% of the available limit that
on any one card or on any one
card.
Okay.
Correct.
Okay.
So that's the unspoken rule, and that's it's a huge impact in the way on the mortgage side. The way we look at it is that a lot of people are paying their mortgage or their credit cards on time. They paid off. Some individuals paid off at the end of the month, but depending on when we look at the actual credit report, could impact what the balance to limit ratios look like. So, and whenever I have a chance to talk to anyone, I always advise them that, listen, if you're going to be applying for a mortgage or anything that's going to look at your credit scores, not to utilize that card above the 30% limit for at least 60 days prior to.
Okay.
That's a good tip.
Yeah.
Let's repeat that. So if you're going to apply for a mortgage, do not use
use only up to 30% of the available limit. So when we pull the credit report, we'll be able to actually see that your balance to limit ratios are 30% or below. So it doesn't impact your scores in a negative way.
For 60 days prior to your application?
Correct. Only because the information that we see on our end is anywhere between 45 to 60 days behind actual. So you may have paid your credit card off yesterday. That's not going to reflect until at least next month, the middle of next month, or the end of the following month.
Good
Okay.
tip.
That's a great tip.
Mm-hmm.
So I have two more questions. I'm going to throw on both of you at the same time. So the first one is running a credit report. So during COVID, people can run free credit reports once a week. My credit was attacked. I got a $20,000 charge or attempted charge on my credit card. That's insane. But luckily I have my notifications turned on. The other one is freezing your credit if you're not going to be needing it, like to open a credit card. So can you talk about those two concepts?
Absolutely. The freezing part of it, one of the questions that I ask individuals before I pull their credit report and get their permission to do so, I ask them if any of the three bureaus have been frozen for whatever purpose. Because on the mortgage side, we need to see all three credit scores in order to be able to proceed.
Okay.
Some institutions, some bureaus are easier to unfreeze than others. TransUnion is having the toughest time right now, for example, because they don't have enough support to be able to help individuals that had frozen their credit scores. So you almost have to send a letter to them, because I've had clients that waited on the phone for 4 or 5 hours trying to get somebody live on the phone.
Wow.
So I advise them to actually just send a letter. Within 10 days, you'll have the credit report or the credit bureau unfrozen.
So should you just freeze one? I think I froze Equifax and not the others.
Equifax and Experian are much easier. If you have a PIN number when you actually do it, you remember, a lot of people forget their PIN numbers. So now they have to go through the whole process of trying to redo that, and everything's in writing after that. So if you're an individual that keeps good record, if you know what your PIN number is, it's much easier to be able to freeze and unfreeze.
Okay.
So once you unfreeze it, I recommend keeping it unfrozen while you're going through the mortgage process, because not only do we pull a credit report in the beginning of the application to determine what direction we're going to go with the product, and they also pull another credit report during the process about 10 days before settlement to ensure that you didn't open any new credit in the process of obtaining a mortgage. If you did, we have to use that against you as far as the liabilities associated with that new credit. So if you freeze it, now you have to unfreeze it again. So I recommend, if you're applying for a mortgage, unfreeze it in the beginning and then let it go all the way through to the end until settlement, and then you can freeze it back up again.
All right. And that does not have a negative impact on your credit score?
At all. Not at all.
Okay. All right. Let me see if I have any other. Is there a limit as to how many credit cards you should have or not have if you're just starting out credit? And I know before we hopped on this live, you were talking about the shotgun effect, and maybe that fits in under that umbrella.
Sure. Generally, we would like to see 2 or 3 trade lines, 2 or 3 credit cards, active accounts. If they're closed, it's not going to help your credit score whatsoever. So it's important to have at least revolving credit card accounts to be able to help increase your scores slowly. If you have a student loan on there, that's an installment loan. If you have a car loan on there, that's an installment loan. They do not impact your credit scores unless you don't make payments on it. They don't help increase your scores even though you're making good payments on there. The revolving debt has the biggest impact on how your scores change from month to month. So it's very, very important to be able to manage those credit cards. So we look at least 2 or 3 minimum trade lines, and they also help you improve your credit scores when you have those. Something else I wanted to mention is a lot of people have home equity lines of credit on their existing homes. Home equity lines of credit are considered a credit card. They're revolving.
Oh.
So if you go above the 30% threshold on those balances, that's going to negatively impact your credit score as well. So that's something to keep in mind. I recommend clients, if they're thinking about a divorce, or if they're thinking about doing something with obtaining a new mortgage, to try to limit the amount of money that you're using on that on the line of credit.
Okay, that's really good advice.
How long does it take you to increase your credit score?
Depending on what you do. I've had tremendous success with individuals. I actually had the means to be able to pay down their balances. And then what we do on our end is we do what's called a rapid rescore. So if you have the means to be able to bring it down to 30%, we can take that information and rescore the mortgage, your credit scores, just for the mortgage. But if you're paying on a monthly basis on that credit card, it's going to take you a very long time to be able to bring down the balances.
Right. Okay.
So your lower balances increase your credit score. Is that what you're saying?
It does, absolutely. I mean, the credit score, the model, there are 33 different criteria that the mortgage industry looks at to determine what your credit scores are. So a lot of individuals come to me and say, I have credit scores in the 700s. Credit Karma told me that this is where I am. One of my responses to that is Credit Karma is a feel-good number. What I mean by that is Credit Karma has absolutely no filters whatsoever. They don't look at your balance to limit ratios. They don't look at new accounts, how old your accounts are. On the mortgage side, we look at all of that. So it's really important to be able to manage that and stay ahead of it, because it takes much longer to improve your scores than it is to actually reduce them very quickly.
Wow.
Kind of like your GPA in college.
It is.
You got to start out good the freshman year.
And to that point, this really, whether you're married or not, single, whatever, establishing your own credit score and your own credit health is important.
It is.
From what I'm hearing. Yeah.
Absolutely. And one of the things that they don't really teach you in high school or in college is how to manage your credit score. And that's one of the most important things that I have some opportunities at times to, before all this COVID started, I would actually go to Future Business Leaders of America at high schools and actually communicate with the seniors to give them an idea what it's like to be on the outside and have a credit card and what to do as far as managing them. So it's one of my passions that I'd like to be able to educate individuals before they even get a chance to make any mistakes.
So give us 3 tips that we can pass on.
Sure. Apply for a credit card as soon as you're eligible for it. Manage it. Don't use it as a savings account. It isn't, because you have to pay it back. Keep it within 30% of the limit at all times.
I like that. 30% of the limit at all times. My children, if you're listening to us out there, 30% of the limit at all times.
That's right. Because
why are you laughing, Diana?
Oh, wow. Thank you.
That's really
excellent.
good.
Thank you. It's exactly what we needed. I think the next time that we have a conversation with you, we need to review refinance transactions and establishing a home ownership during or post-divorce. So everyone stay tuned for that. That'll be our next conversation. All right, it's wonderful. All right, can you give people your contact information, please?
Sure. My contact information is 267-966-5020. I'm with Univest Bank. I don't know if you can see it. And I've been with this institution for over 5 years. Fantastic community institution, and I look forward to helping anyone.
Excellent. And we'll ask Kelsey to put a link to your website when we post this as well. So thank you so much.
My pleasure.
And we look forward to talking. Be safe and healthy.
Thank you, Aret. Nice seeing you.
Bye-bye, guys.
Okay, bye-bye.